Did you know that some people borrow thousands of dollars for free? No bank loan, no interest, no hidden fees? Sounds impossible, right? Well, it's called credit card arbitrage, and it's one of the smartest short-term money hacks that most people don't even know exists. In this video, I'll break down step by step how you can use 0% credit card offers safely, avoid the traps, and even make extra money from it. Stay till the end, because I'll also share a strategy used by savvy investors to turn these offers into mini profit machines. Let's be honest. Almost everyone has credit cards. But here's the catch: while most people get stuck paying 20% interest, a small group of financially smart individuals use those very same cards as a free loan system. Think about this. You need $5,000 for an emergency or investment. Instead of taking a personal loan at 12% interest, you borrow it at 0% APR using a credit card promo. That's what credit card arbitrage is all about. By the end of this video, you'll have a clear roadmap to using these offers safely, without falling into debt traps. Credit cards were first introduced in the 1950s, and since then, they've evolved into one of the most powerful financial tools. Initially, they were just a way to pay later, but in the last 20 years, banks started offering introductory 0% APR deals to attract new customers. According to Experian, in the US alone, over 70% of credit cards issued in 2023 included some form of 0% intro APR, either on purchases or balance transfers. Globally, this concept has gained traction too. In markets like the UK, Australia, and Canada, similar promotional offers exist, allowing millions of people to manage cash flow better. But here's the twist. While most people just use these offers casually, a financially smart few figured out a way to strategically borrow free money, invest or save it, and profit. That's credit card arbitrage. So how does this actually work? Let's break it down. Step 1. Apply for a card with a 0% APR offer, usually lasting 12 to 18 months. Step 2. Use that card for purchases or do a balance transfer. Step 3. Instead of spending the borrowed money recklessly, you set it aside in a high-yield savings account or short-term investment. Step 4. Pay it back before the promo period ends. Case study. A guy named Mark borrowed $10,000 at 0% for 15 months. He placed it into a high-yield savings account earning 4%. In 15 months, he pocketed around $500 profit, completely risk-free. This is the simplest form of arbitrage. No risky trading, no crypto gambles, just smart cash flow management. Now let's go a little deeper. Credit card arbitrage isn't just about parking money in a savings account. Some savvy individuals use it to pay off higher interest debt. Imagine you have $5,000 in student loans or personal debt at 10% interest. By transferring it to a 0% card, you're instantly saving hundreds in interest while buying time to pay it off. You might be wondering, is this really how billionaires think? Yes. They may not use credit cards themselves at this stage, but the principle is the same. Wealthy people are obsessed with borrowing cheap and investing smart. They raise money at low interest, put it into assets that yield higher returns, and pocket the difference. Credit card arbitrage is the everyday person's version of that same strategy. Of course, like any financial hack, this comes with pros and cons. White heavy checkmark: pros. Access to short-term free money. Opportunity to save or invest without paying interest. Flexibility in managing emergencies. Crossmark: cons. If you miss a payment, interest kicks in at 20% plus. Some cards charge a balance transfer fee, usually 3 to 5%. Requires discipline. If you overspend, you can drown in debt. Think of it like a sharp knife. In the hands of a chef, it creates art. In careless hands, it causes harm. Quick story. My friend tried this strategy but failed to set reminders for payments. One missed due date and boom, all the savings vanished because interest kicked in. Lesson: organization is key. So what's the future of credit card arbitrage? By 2025 and beyond, we'll likely see more digital banks offering AI-personalized 0% deals, integration with crypto wallets, letting you borrow at 0% and park money in stablecoins for yield, global expansion, especially in Asia and Africa where digital payments are growing rapidly. But here are the risks. Banks may tighten these offers as more people catch on. Economic shifts could reduce the profitability of arbitrage if interest rates drop everywhere. And of course, behavioral risk, people chasing free money but ending up in debt. Here's a what-if scenario. What if tomorrow, instead of just saving a few $100s, you could stack multiple 0% offers and generate thousands of dollars in passive income? Tempting, right? But also risky if you don't manage it properly. So let's wrap this up. Credit card arbitrage is essentially a free short-term loan if you play it smart. White heavy checkmark borrow at 0%. White heavy checkmark park the money in a safe place. White heavy checkmark pay it back before the deadline. Do this right and you could save or earn hundreds, even thousands, without lifting a finger. Remember this line: the bank's promo can be your profit if you play the game wisely. If you found this video valuable, make sure to hit that thumbs up button, subscribe bell for more finance hacks, and comment writing hand below. Tell me if you've ever used a 0% offer before, or if you're planning to try credit card arbitrage after this video. Thanks for watching, and I'll see you in the next one.